The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 6th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, and I mean more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email. Let those fingers do the walking. Steve at TFNN.com, inside the subject heading. If you would put radio show question, just like Tom G and Michael P did here just a few moments ago. So I'd like to hear from you as well. Of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Election Day Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 143 points, 25,606 is the print. S&P is up 14, so they're up a little over 0.5%. You've got the NDX 100 up 53 points, or 0.7%. The semis are up 1.25%, 1244 is the print. That's up 15 buckaroonies. Spot volatility index down about 12 pennies, 1984, still a bit too high. Gold's pulling back $5. Silver's off 10 pennies. Light sweet crude off $1.50 out there, of course. And my apology, I would tell you who's leading the charge, the upside and downside, but I have to reset my system out here. Right now, it looks like Booking Holdings up $100, Amazon up 24, Google up 15, Novanta up 12, Mark Marietta up 11. To the downside, looks like Front Door down 30% or $10, $11. FTDR is a ticker symbol. Nevro Corp down 7, Broadridge Financial off 11 or 10%. 2U Inc. is down 1240. But of course, I want to look at what you want to look at. So let's start with the emails that came in. Let's go right to those. And the first one coming from Michael P. Michael P. says, hello, Steve. Hello, Michael. I'm in ACB for long-term, and I got it. CGC today for 1/3 trade, 1/3 long-term. How does it look? Well, let's go take a look at both those. Let's look at begin by doing that. Take a look at our 3 time frame charts out here. Let's actually get to them. ACB is the ticker symbol. That is Aurora Cannabis out here. And what do we know about Aurora Cannabis? Well, in taking a look at this chart out here, which shows our daily, our weekly, and our monthly set of TAS market profiles, to me, Michael, looks like you got a bit of resistance at 788. That's the bottom of the TAS market profile. You'd like to see it get above that. More importantly, if it does, then your next resistance level is going to be 883. That's the top of the daily profile out there. What I would say with regard to today's action is you got to be careful. And I know you're going to say, why? The reason that you've got to be careful is because what price is doing in this little counter trend rally thus far, it's testing yours and my red line. That is exactly what it is doing. We can see that if you watch us on TigerTV, you'll see that the high of today is Stevie's red line. In the case of Aurora Cannabis, made that Rhodes or generated that Rhodes momentum topping signal out there. So that's good. Price came right down to that Tom DeMark short setup trend line. That's the red dash line out there. So it held. And now what price is doing today, it's testing Stevie's red line. When it's red, it tells us that we have a falling price oscillator below zero. We expected or anticipated or should have anticipated that price would bounce up to that line. That's the oscillator and change line. Why? Because as this turned from green to red, what that told us is that price oscillator, bottom panel, if you're watching this on TigerTV, got down to the zero line. When it gets down to the zero line, we anticipate that over the coming sessions, we don't know how many, we just know that over the coming sessions, we're going to anticipate that price and Stevie's line are going to catch up to each other. And when they do, that's when it releases information to you. Now today, Michael, if price closes underneath that level, which is right around, looks like 764, 765, you've got to be careful. You want price above that level. Why do you have to be careful? Because if it turns down from here, you still have a falling price oscillator below zero. That says you can easily go test, the lows from October 31st out here. What does it mean if price closes above it? Well, then at least you're slightly out of the woods. But you are not out of the woods right now. You've had a counter trend rally right into resistance when we take a look at Stevie's red line. You talked about ticker symbol CGC out here. Let's go see what it's doing as well. Now, in the case of CGC, this looks a bit better. Here we can see the test of Stevie's red line that took place yesterday, a slight close above it, some follow through to the upside. So a similar-ish looking chart, although not exactly the same. When this made a bottom out here, it did it with that Tom DeMark setup 9 count. I mean, that was the bottom to the day back here on the trading session of October 31st. So this is looking better than the first equity, ACB, that you gave to me. So ticker symbol is CGC. All right, is that the... I'm typing in the wrong spot out there. Hello, CGC. Just to give you the market profiles, Canopy Growth. You do have some resistance at 44.75, so that's your next resistance level. But this one at least has a bullish message, whereas the other one did not. I hope that helps you out. Tom G writes in, he says, good afternoon, Steve. Good afternoon, Tom. Says, I'm long SEO since 1868. I believe that is the short of light sweet crude out here. Right now, that's trading out at 1856, so you're in at 1686. Nice trade. Can you tell me if I should get out of it today or so, or move the stop up to 1824 and ride it a bit? So the question here, Tom, is what's your take on light sweet crude? More so than taking a look at the SEO chart. So if that's the case, which I say that's the case, well, then what we have to do is we've got to go take a look at what is light sweet crude doing out here. And as we take a look at light sweet crude, first, if we're looking at possible support this week, let me turn off the Fibonacci retracements out here. You can see that right now as we speak, price is trading below that level. What is that level? That level is the bottom of the weekly profile, Tom. That price point is 61.88. We're trading at 61.62 as we speak right now. Now, it's a weekly chart. It's only Tuesday. But ideally, you'd like to see price close below that this week. And if it does, it says that price is headed to, or should head to, 57.43 next. That's a 0.618 retracement. I like the trade. I know how you like to take your profits. So if you do, I understand. But it looks to me like light sweet crude wants to continue to mosey on to the downside. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So, Tom, I want to, go ahead and finish answering your question. We were going into that hard break right there, and so when I say if it were me, I would go ahead and continue to ride it. Prices below a key level of support, albeit a weekly support level. If we take a look at, and this is what is really key. There's several keys out here, but this screen that you're looking at shows you various instruments and how they're priced in the major currencies out here. So if you look to the very bottom left, what you're going to see is light sweet crude in dollars, in pound sterling, in euros, and in yen. And what you'll notice is each of them are down by over 2%, 2% or more to the downside. I wouldn't worry about the dollar amount. I would just really be paying attention to the percentage. So when things are trading in all major currencies to the upside or the downside, it tells you you've got all kinds of traders on one side of the trade. Now, we'd want to take a look at the charts, see where support is and so forth. But here's just a quick synopsis that what we can see is that light sweet crude is moving lower in all major currencies. If we take a look at the stock chart out here, what we're going to see is that it topped on October the 3rd. Now, not that I'm a, conspiracy theorist or anything like that out there, but that Jamal Khashoggi guy who was murdered, killed, dismembered, the whole 9 yards out there, that took place, I believe, was on October 2nd. I don't think the news was released until October 3rd and October 4th. Is it really a coincidence? Really? Is it really a coincidence that that is when light sweet crude topped? Maybe it was. Stevie doesn't buy that. That's a bunch of BS. So we know how the current administration doesn't like these high oil prices. We know about the Iran stuff and trying to flush them out and kind of hurt them financially. And if you drive the price of crude oil lower, don't you think that hurts them a bit? So just from a non-technical standpoint, but technically speaking, I don't see any kind of a bottom here on a daily basis. So if it were me, and it's not, I'd at least hang with some or all of that trade that you've got out there. Likely what's going on in the quid pro quo game is light sweet crude is headed lower out there. So I hope that helps you out. I hope that doesn't mess up your thinking with regard to the trade out there. We've got a question out here from BK. It says, hi, Steve. How are you doing? Fine. I'm Adam. Can you please look at LOW to short? Well, let's go take a look at low out here. Let's look at their 3 time frames for you. And we'll take a look at that. And so you want to short this. How come you didn't short it way back here when it was up at the October 1st level in the 117 area? It's now 97 buckaroonies out there. Something to think about. Now, in the case of lows out here, I'm going to say, no, you can't short it just yet if you want to re-short it. And the reason is because, you know what, Adam, maybe this thing has formed a bottom. Yeah. Maybe it has. Of course, we could say maybe it has to anything, right? No, not necessarily true. Here's what we know when we take a look at this chart here for lows. We can see that when it made a bottom, which was on the trade day of October 29th, the market, by the way, made a bottom on October 29th and 30th. Here on October 30th, what you got to was your Tom DeMark setup 9 count. Oftentimes, not always, but when they show up, you pay attention. And what happened? Well, that turns out to be the bottom. Now what we've got is price trade, or appears to be, or a bottom, or the most recent bottom. And we've got price trading above Stevie's red line. 96.21 is the number out here. So this at least wants to do more of a counter trend rally into 99.80. So if you're going to short it, I'd say, well, that might be the place to do it. Take a look at what the volume is if, in fact, price is getting up to 99.80. Why do we say that? Well, because you'd want to take a look at the last swing point, which was just a few days ago as price was moving higher, was with 4.5 million shares. If you're moving up into 99.80 with more than 4.5 million shares, then you probably have an A to B equals CD to the upside. Nonetheless, 99.80 is going to be your resistance level. But it's now not below a key level of support. Instead, it's above it, Stevie's red line, and maybe what Lowe's is trying to do is make an A to B equals CD to the upside. I don't know if it is or it isn't. We won't know until it passes the swing point. If it does pass the swing point from just a few days ago on November 2nd out here, but I'm not seeing where the reward risk is really on your side as we speak right now. So, Adam, thanks for writing in, and I hope that helps you out. N.A. Nancy writes in and says, Steve, turning in a bit late. Oh, did you oversleep? Says, what's your take on Intel, INTC? So if we take a look at Intel, and it's never too late to turn into the Trader's Edge show. So Nancy goes on to say, it had some strength yesterday, but is selling off a bit today, looking for a good entry point. And that comes from Washington. So what are we going to do with Intel out here? What are we going to do? I'm going to give you the best information I can. So you're trying to buy this to the long side. Here's the beauty. Here's the beauty of the. Here's what I'm going to start with. Well, I'm going to start with a different chart probably. I'm going to start with this chart because I'm not going to take a look at the TAS market profiles for you, Nate. So we're going to take a look at the semiconductor index out here. So the semiconductor index, of which Intel is a big part of it, formed a nice bottom Aruni. Yeah, formed that Rhodes momentum indicator signal, and it did it all in one day, which was October the 30th out here. So it does show signs of a bottom. Price is above Stevie's red line. That's another beautiful thing. That's priced at 1198.10 out here. You're going to be in day number 6, it looks like, of that Tom DeMark setup trend line level. So you can at least go to day number 9. You can at least bounce up into this 1323 level out there. So things are looking pretty decent in the semiconductor space. If I take a look at Intel specifically does not have that same pattern, does not have that exact same set of patterns. Today is going to be a Tom DeMark setup 9 count. It looks like 1, 2, 3, 4. Yeah, unless it closes below the October 31st low out there. Selling off? No. Moving sideways? Yes. I'd wait on Intel. I'd wait on the general market as we speak right now. There's really I can give you plenty of reasons where the question that you and I have to answer is, has the market generated a tell for us? Has it generated a tell with regard to how it's going to react with regard to the midterm election news out there? And I can show you where the market formed a significant bottom in all U.S. indices by October the 30th. All. Not just a few, not a handful, but all of them. The Dow, the transports, the semis, the Russell 2000, just one after another, the New York Stock Exchange, the Wilshire 5000. You just keep, but, and if that's the case, and if it is the significant bottom, which takes place in the fourth quarter, usually in October. Now we're talking October 29th. The Santa Claus rally would have a long way to go. So what I would suggest is that, Nancy, you don't have to step in right now. You can step in tomorrow. Maybe you get a bit of a pullback. Maybe that pullback inside of Intel is the Stevie's red line, around the 46, we'll call it 90-ish, 45, 90-ish to 46, 31 type area. Just be patient on INTC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Sweet Ruby Tuesday in the Den wants to take a look at the Russell 2000. I've got the equity futures contract up on my screen. I hope that's okay with you, Ruby. So the markets, all of the U.S. indices, not all of the markets, all the U.S. indices generated bottom signals on the 30th. However, what was interesting about the 29th is the S&P, the NASDAQ, and the Dow went to a lower low. But the Russell 2000 did not. And I even wrote in my newsletter during the evening follow-up on October 29th, I said, that's really interesting. We didn't get a bottom signal, but I find it very interesting. Is that some type of signal to us? And we found out that the very next day that, in fact, it was. So maybe you want to just go ahead and stash that in your cap to play with next time around, either to the upside or to the downside out here. And what we saw was a nice little bullish engulfing candle and a close above Stevie's red line on October 30th. What we've seen take place since then is the Russell 2000 equity futures contract we're looking at continue to move higher. In wave number 3, letter C, you are going to be in Tom DeMark setup 9 count. You're going to be in count number 6. Of course, we don't know if it turns into a 9 count until after 9 consecutive sessions out here. But this looks bullish. It looks like at least further counter trend rally when we take a look at a daily time frame chart. Now, if it's going to find some resistance, we're basically there right now. So we've got to know what your time frame trade is, what you're trying to do here. But if we take a look at the 4 different time frames, 60, 120, 300 daily and weekly, that's the chart you're looking at right now for the equity futures contract, you'll see that we've been up at this level before. And so price has made a move of a move. It's gotten back to the swing point. This is about 7 o'clock in the morning on November the 2nd. We're trading slightly above it. So you want to continue to see this motor on higher out here, but it's been up at a level, over the past several days where it's gone kaput. Maybe it does, maybe it doesn't. Price is trading above the top of its daily profile, 1551.80. So if you're going to stay in the trade, stay in it. Don't let it get below that level, because if it gets below that level, well, I'm not saying you can't. I don't know what your time frame horizon is. It would just tell me that, okay, you don't have a breakout. If it does stay above 1551.80, if it continues to move above 1559.70 now, that's the 120-minute top of its daily profile, probably wants to head higher. Maybe there's a tell here in the market with regard to the Russell 2000 equity futures contract. Is there? I don't know. I don't know, but maybe there is. It's most certainly, I can't look you straight in the eyes except through my little camera thing out there. And so I'm looking you straight in the eyes. And I can look you straight in the eyes and tell you that every single U.S. indice formed a bottom. Is it going to hold coming into this unusual, election year cycle, so to speak, where everybody just simply, give them the uppercuts and so forth? I don't know. If the spot volatility index was not trading where it is at right now, then I could easily look you in the eye and tell you that the tell is in and the markets are moving higher. I can't do that. Maybe there's going to be a pullback. Maybe it's some type of top. It is possible, even though we've gotten all these bottom signals out there. There's just one piece of the pie that is missing out here. Just one piece of the pie. And until that piece gets filled in, until that ingredient gets done, I don't know. But Ruby, I hope this helps you out with regard to what Stevie sees inside of the Russell 2000. And just to make sure that I was clear, because Jay basically had made a statement question, so what we all see has already happened. That must have been a comment with regard to, was that or you were saying, so Steve, you're saying that the outcome does not matter and the market will go up from here. No, I'm not saying that. But I'm saying we can go take a look at every U.S. indice out here, just like we did with the SOX, okay, back on October 29th. Here, if we take a look at the transports as another example, another one of the indices that got, kaboom to the downside. Same pattern out here. Rhodes momentum indicator bottom. We can see when the top came in out here in September inside of this indice. So it's generated a nice little bottoming pattern. We can just simply go through this one by one by one by one by one. Can you really say that one by one by one? I just did. I don't know that it means anything. Here's the New York Stock Exchange. What did it do? It made that Rhodes momentum bottom signal. So, Jay, all I'm saying to you is, hey, look, maybe the market knew something back on the 29th and 30th out here. Maybe that was the early tell. What's not the William tell out here is what the Sam heck is going on in that spot volatility index. Is that really trying to send us a message of caution? And it's possible. What do you mean? What do I mean? What I mean is, if we take a look at the spot volatility index right now, 1984 is the print. What we can see is it's trading above all of the futures contracts, all of them, going out to June of 2019. Now, that's a backwardation scenario that will get fixed. It has to get its act in order. It probably does so over the coming days. I don't know if it's tomorrow or if it's Thursday or Friday or next Monday. I do know when it does get back in the line, then at that stage it would confirm the message that, yeah, hey, that the bottom that we saw in all the U.S. indices on the 29th, that was the beginning of the Santa Claus rally. But if in fact that's the case, the markets have got much further to run to the upside, and the reason is because we are in a consolidation pattern inside of the Dow, with the top of the consolidation being 26,616. So if, in fact, last Thursday, Friday, Wednesday, Thursday was a bottom in the market, then we ought to see the Dow head up to 26,616. And if price takes it out, well, then we've got a huge move to the upside. Now, what's interesting to me when I take a look at this chart here today is really the Dow priced in yen. The Dow priced in yen is trying to get back above its high from, you guessed it, in January of 2018. The reason why that's of interest to me, now I got to pull this back together here, is because the Dow priced in pounds, the Dow priced in euros, is trading above the top of that consolidation. In other words, the traders of the Dow equity futures contract in euros and pounds, they have a clear and unequivocal outlook, which is bullish. They are investing in the U.S. stock markets. And that is really the key. It is really only traders here on this side of the pond, in this contiguous 50 states. Well, it's not really contiguous because of Hawaii out there, but just have to build a long bridge. It's just the traders of in U.S. dollars that are a little concerned out here. That's why what Stevie will be watching tonight, early in the morning, is how are these markets actually trading in all these major currencies? Because in the end, I can give you all kinds of great technical indicators. And by the way, they are great technical indicators. They help us to identify tops and bottoms. We just took a look at that. But the most fundamental technical thing that you and I can understand is, what do traders around the globe think of different instruments? That is really the key. Right now, traders of the Dow across the globe, it's up. It's up just slightly in pound sterling, 0.8% out there, 0.6% in yen, a little over 0.4% in euros, about 0.4% in dollars out here. Stevie will be watching this, and you should too. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. One of the questions is from the Tiger's Den. Mr. Z writes in, as you can figure it out, please lay out the bear S&P 500 scenario. So if what I'll do here is I'll actually go ahead and pull up the S&P 500 chart, but what we'll also do is we'll slide over into the ES Mini, since that's what we'll be actively trading tonight out here. But the bear case for me, so here's another indice that formed that nice Rhodes momentum indicator bottom. So not to be ignored. We're not ignoring it. And we can see the price is above Stevie's red line. So for me, Mr. Z, the bearish case can't come into play until we see it close below Stevie's red line. As we speak right now, that level is 2707.17, or give it, let's just call it 2707. The number is going to change out here. You've got a bottoming signal. You're in day number 6 of a Tommy DeMark set, potential Tommy DeMark setup 9 count out here. So right now at 143, we see the so-called bullish case. Now, I know that you took a short position out here. I think that you did. I don't have time to go read through all the messages as they're coming through the system out here. But not the intraday, but the longer-term bearish message for the S&P 500 would be that price needs to get below 2707.10. That's support. That's Stevie's red line. If it gets below that, we're back to a falling price oscillator below zero. We took a look at that with regard to one of the pot stocks out there that we looked at for Michael out there, and how important it is for him and where price closes today inside of that equity. As we slide over into the ES Mini out here, well, actually all 4 equity futures contracts, we're going to see that as of 144, the Dow has been above the top of its box. Top of its box, folks, is resistance. Once you're above resistance, old resistance becomes new support. Well, that's been proof in the pudding here inside the YM. The Dow Equity Futures contract is 25,143, has been tested on 3 of the last 4 days out here. So it's a strong support. Russell 2000, Ruby, now we're taking a look at it and saying, hey, you know what? Price is trading above the top of its box right now, 1551.80. That's why we said, okay, you can stay with the trade. Don't let price get back underneath it. You'd have a third day in a row of a rejection of that level. We don't have that as we speak. The NQ trading in between profiles. We know the top of the profile box, 7147.50, is an important level of resistance. How do we know that? Because on Friday, that was the top of that was the high, almost the high. Missed it by about 3 points out there inside the market. Key level out here. So we don't have a lot of information really with regard to the NQ other than it's trading with inside a bullish structured daily box. To the ES. Yes, it hasn't taken out the high from a few days ago. Resistance here, 27.80.75. At this stage, based on what we see, almost seems more likely than not. Price are going to go test that area, 27.80.75, the top of its box, before it might turn down. Is that a possibility? Seems like a possibility to me. This is also inside a bullish structured box. If we just take a look at the ES mini on a daily time frame out here, its red line that it would need to close below is 27.08. Even Steven as we speak right now. And what we can see over the past couple of days, not yesterday, but the day before and the day before that, was price was testing that level, Stevie's red line. That is a level of support out there. So price would need to close below that area in order to get bearish, and bearish may just be coming back to the bottom of the profile inside the ES, which is 26.22. So that's what I see when I take a look at the ES mini. If I do go take a look at a 30-minute time frame chart, it looks like it's trying to form a little Rhodes momentum indicator top out here. Let's take a quick peek at it. Take a quick peek. Come on, update for us. We're live on the air here. I think I have too many things running, and that's why it's taking some time to update here, which is a real bummer because, you know, oh, geez, I really kind of need this information. There we go. No, I take it back. It has not. So the 30-minute chart out here, I don't see anything that says, hey, we've got an impending top other than the top of its profile box. That's 27.51.75. So I'd say watch that level. That's your intraday. You need to get below 27.46 in order for this to pull back and test 27.41. So, Mr. Z, I hope that helps you out with regard to the ES Mini. Hey, let's go out to California and speak with our man, Garo. Garo, thanks for calling. Thanks for holding. How are you today?
I'm very good. How about you, sir?
I'm also doing well. Thank you so much for asking. And what you want to take a look at is Square. Ticker symbol is SQ. I'm getting your chart up on my system. And so tell us what you're doing. Other than I can see you must be looking at taking a long position because of that 5/21 crossover that took place, looks like yesterday or today. Am I right?
Yes, sir.
Okay.
Yes, sir, exactly. Exactly.
Okay.
The 5-day crossed 21-day at the daily chart. We have 4 dots at the bottom.
Yes.
It's on the way towards 50-day, which is $84.
Yes.
And if that crosses $84 up and the 5-day crosses the 50-day, then we're talking $100. Now, on a weekly chart, still, it hasn't given me no confirmation because still the 5-day is under the 21-day and it has not rolled up yet.
Sure.
I don't think it will roll up on Monday, this coming Monday or not. I needed your opinion that is it a time to get in slowly but surely, or we have to wait?
Well, at least I've got your system slightly down pat out there because we could pull up the Garo chart and I could get a feel for what it is you're doing out here. So what we need to do out here. So here's the message. The weekly is the one time frame where you're saying, you know what, I don't have any type of confirmation using the parabolic SAR system out there. The confirmation that you do have that it looks pretty good is the mere fact that price is trading for a second week in a row above the top of its bearish structured weekly profile. I'll expand the chart out. We'll go ahead and we'll turn off price. That way it's easy for everybody to be able to see when I say bullish structure. Here's the box we're looking at. It formed the week that began September 24th, and the center line at 72.12 was closer to the top, 75.09. The top of the box is where sellers are at. The center line at 72.12 is where both buyers and sellers, so we know that there was congestion up there. And just like on an expressway, once you clear that congestion area, you can let it wide open if you want to. Well, in this case here, it closed above last week. That's the 75.09 level. You're trading above it right now. So the weekly says, hey, you're above at least resistance out here. So that's a small positive for the weekly time frame. In the case of the daily time frame, what you really want to be able to see this do is clear the high from October 17th. Now, that has 17 million shares. You're pushing into it today with 13 million shares. That's pretty cool. That's pretty good. But this thing for you, in order to, on the daily basis, give you some additional buy information, you want to see this close over 80.32. By the way, Garo, that doesn't have to happen today, but it looks fairly good on a daily time frame out here as well. Now, look, we're just about to go to the hard breakout here. Is there something else that I can help you with on Square?
No, sir, that was fine. That was exactly what I was thinking. I appreciate every time I call you, I learn something new. Thank you. God bless you. Thank you, sir. Bye-bye.
You're welcome. That was Garo in California. When we get back, we'll do the 2-minute wrap. Steve Rhodes with TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So when Mr. Z asked me to take a look at the S&P 500, he was asking the wrong question. He should have said, hey Steve-O, go look at the New York Stock Exchange. See if you can find, give me your bearish signal coming from the New York Stock Exchange. Now, the reason I say that is what we can see out here is if you take a look at panel number 2, the reading is 149 and change, 149.46 right now. You'll see a yellow line that says plus 150. There it says really just 150, which is a plus 150, and price is right up there. Now, 150 is the potential overbought reading level for the New York Stock Exchange. I know many of you are saying, how could we possibly be in an overbought scenario just coming from last Thursday? I'm just calling it like it is out there, and that's really important. You can see right now it's just above 150 out here. The cool thing about the New York Stock Exchange is if it closes above 150 today, at the end of the day, closes above 150, yes, they're still overbought, but what they signal to you and I is higher prices to come in the future. I'm not talking years from now. I'm talking days or weeks from now. Also, when the market turns down, there's the plus 150 failure. We can take a look at examples of that. For example, the high out here in the New York Stock Exchange on February 26th, that final reading out there was 140. If I take a look at the reading out here on the trading day of March 9th, it was 150.53. That was a turn down. We're going to call that a plus 150 failure. If we take a look at, again, nothing major in the way that it turned down. April 17th, the reading was 151.30. That was a minus 150 failure, just a pullback out here. So it looks like we're right up at that key level for the New York Stock Exchange. The other thing you're going to watch is the bottom panel of my screen. Watch that spot volatility index overnight. If it's trading below 1766 and it closes below 1766, I'm telling you, the markets are going to be moving higher, much, much higher. So there's your bullish and your bearish case, or at least what to be paying attention to. Folks, have a great Tuesday. We'll see you on Wonderful Wednesday. Thanks so much for being here. Stay tuned. Your favorite polar bear, David White, is up next.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.